about it. We've seen ways to filter out bullish market scenarios. We've, just as a quick review, we've determined in low volatile trading sessions to use R1 down to S1. We've determined that if the close is greater than the open, to potentially use S1 up to R2. We've also determined that if the close is above the pivot point and the open and the prior time period's low or close, we want to do what? Use S1 up to R2. Now, what about the downside? Real simple. If the market closes below that time period's pivot point, we're going to be assuming the market's bearish. So in other words, if this is our pivot point and the market's closing below the pivot point, if it also closes below the prior time period's close, and if we close below the time period's open, so we have several bearish indicators. And more importantly, if the market's going to do what? Close close to the low. Those are all hints that we should be looking at a potential bearish turnaround in the market. Notice that, and that's what we're looking for. We're looking for reversals in the market. We're looking for the market to go from an uptrend. What's going to give us that trigger, that signal to go to the downtrend? And this, my friends, is that system, that methodology. We're looking for these conditional changes in the market. That's what we call them. I'm looking for the market to show me if it was truly bullish, then the market should close above the open. And we should see higher highs and higher lows. And the market, if this was truly bullish, we have that formula. We have a higher high. We have a higher low. But the market closes below what? Its close. The market closed below its pivot point. The market closed below its open. That's not a very strong bullish sign. So therefore, I would be more prone to looking for the next session for pivot to R1 all the way down to S2. And that would be how I would use the pivot point in relationship to the close to help filter out which numbers to use. Now, if you think about this, in this example here, we are what? Making lower highs, lower lows, lower closing lows. In other words, this close right there closed below that low, right? If you draw a line straight across, we've done what? We've closed below that low. So with that, and if we draw a line here, let me go through here. See that low right there? And you see the close? The close is below that low. That is a very negative, bearish situation. We have lower highs, right? Lower highs, lower highs, lower highs, and we also have lower lows. That's all very bearish. But if in this situation, why would I be bullish? Especially as we see that trend continue. And if that's the case, I got news for you. You want to be looking at what? In this case, if I'm bearish, the market closes below the open. Remember, that was one of the more simplest way of determining whether the market is truly bullish or bearish. If the market closes below the open, then you would want to filter out and use R1 to the pivot point, R1 to the pivot point, and target down to S2. But in the other methodology we've been showing you, if the market actually closes also below the pivot point and below the prior time period's close, we're definitely looking at a change in market condition, or we're looking for the market to remain bearish. And if that's the case, again, R1 to pivot down to S2, and that'll help give you a better idea of what to do when the market gets there as well. So once again, in a bearish market, the highs should be what? Lower. The lows should be lower than the preceding time period. So in that situation, in that scenario, I'm using R1 down to the pivot point to project the high, and then I'm looking for S2 for targeting the potential low for that next time period's trading range. And this is about what that would look like. If we're bearish in the market and we're looking for the trend to continue, why would I be looking for R2 way up here to target a high? If I'm bearish, what? The market should be in a downtrend. We should see what? Lower highs and lower lows. In that case, pivot up to R1, somewhere in here, we're going to be looking for a sell signal. We'll target S2 to be our potential low in a bearish market environment. So that is how we help determine and filter out. And these techniques are covered in your trading manual, but I thought that going through them by not only visually and also audio by me showing you and writing in what you can see with the close in relationship